Hi, this is Larry Shover for Traders Exclusive, reporting from the CME Group in Chicago. The big question everybody's asking is why in the world did we sell off yesterday? Here we are on Tuesday. The market, the S&P 500, has made up most of the ground it lost yesterday, and for really no apparent reason. But let's dig deeper. Right now, convictions in the market are very low. Traders are nervous, they're cautious, and they're reluctant. So with that, you're going to have a very, very volatile market for the market moving in any direction for any reason at all. Secondly, as we get towards the end of earnings season, we're starting to get back to a macro feel to the market where what happens in Europe and China and the emerging markets starts to matter a lot more than individual earnings. So with that said, today the old narrative is back in place. We have a macro calm in place. No news is good news out of Europe. Growth continues to be seen around the world. Earnings in both Europe and the U.S. have been a little bit better than expected, and we continue to have the world's central bank's foot on the gas pedal. So the old narrative is in place. But today specifically, what happened? What really drove the rally? And really all we can point to is perhaps the PMI service sector that came out in the Eurozone today came out just a little bit better than expected, or basically in line when you capture all the detail. That's enough to propel the markets higher. That also with the non-manufacturing ISM that came out in the U.S. this morning came out in line. Also earnings that came out, nothing, again, no news is good news. What's important to realize as we dig deeper into especially the S&P 500 right now is that skew continues to flatten. Term structures flattening. That's something we haven't seen in a while. We're starting to see a slight bid to near-term at-the-money options compared to far deferred out months. And lastly, realized volatility is flirting with a 15-year low. I'm Larry Shover, Chief Investment Officer of SFG Alternatives, with your Traders Exclusive report from the CME Group in Chicago.